Hi, I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors. I've proclaimed for the last year and a half that I am a long-term investor, and then I'm doing something that long-term investors aren't noted to doing, and that is I'm pulling my money out, or at least a portion of it out, because I think there's going to be a correction. In specific, I think there's going to be a correction within the Nasdaq market, and even more specific, I think it's going to be in the big tech companies. And a number of you have been telling me this, that, hey, the PE ratios for Google and Amazon and Microsoft, Apple, Tesla, Facebook are all out of line. Heck, let's see. The highest is that of Tesla. It's at 138, the PE ratio. The best of it is Facebook at 26 and Google at 28. Amazon's at a PE ratio of 65. And so there's a lot of reason why maybe these prices have gotten out of line. But I always believed that in the future, these are going to be the stocks that have the data, that will grab artificial intelligence, that will grab electric vehicle data, and then most important, the revolutionary data that is going to continue them to grow. But I do believe if certain things happen, that we're going to see a pullback. We've seen, I think it's 28 consecutive highs on the Nasdaq over the last year. So I believe there needs to be a pullback. And so I need to make a decision as to what I'm going to do. The other thing I think my advantage in this stock market over the big money is I'm constantly learning. I'm listening to what they have to say, and then I'm doing my research. I've shown you a couple of times a graph that I rely very heavily on that tracks the S&P 500. But I came to the realization I'm not invested in the S&P 500. Instead, I'm actually invested in the Nasdaq market. I mean, my big six are the Nasdaq market. A lot of my biotech stocks are in the Nasdaq market. So I shouldn't be wrapped up in what is happening on the Dow, and I shouldn't be wrapped up on what's happening in the S&P. So I need to be more focused. And so I've created a new chart that I want you to see that I'm using as my, let's call it a barometer, that's going to predict the weather of the future. And by the weather, I mean the movement of the stock market. And I think we've got a storm coming. And I want to get into that in depth in this video and explain to you why I think there's a storm coming, how it will materialize, and then how I'll benefit from it. But first, I got to tell you, I'm not your financial advisor. I'm here for education, and I say entertainment, but I don't think I'm that entertaining. So let's get that out of the way, and then let's look at my new revelation that's guiding me over the next couple months.
Best of Us Investors presents Kerry Grinkmeyer.
The market is a reflection of value, and that is to say that if I have money that is not allocated to my bills, I'm then going to find a way as an investor to get more value out of it. As long as interest rates are lower than inflation rates, to keep any money in cash is a losing proposition. Because the interest I'm going to draw on it's going to be less than inflation, so I'm losing money. So that's why the stock market is so active right now. We have a flood of money. The federal government since 2020 has gone from a national debt of $4 trillion to 28 trillion, almost 29 trillion now. And that money has to go someplace. It has to find a nest to give its holders a gain on their assets, their excess assets that they don't need to spend. And that is what has driven the stock market since 2000. And I want to show you that. And I've shown you it relative to the S&P, but I think what I'm going to show you relative to the Nasdaq's going to really shock you. And then give you some guidance, as it is me, on what I want to do today. So let's look at this new chart that I've created. Okay, this is my chart of the Nasdaq in correlation with the debt of the nation. I've shown you a chart similar to this in the past where I track the events and the debt relative to the S&P. And I realized I'm not invested in the S&P, I'm invested in the Nasdaq. My big six is almost exactly the movers of the Nasdaq. So I said, okay, let's adapt this to something that's pertinent to where I'm invested in. And you can see what I've added is this green line. And that green line is the national debt. And I started it in 2020. As you can see, the date lines up. And then I went over here and since it was 4 trillion, I attached it to this 40 here. Then when it went to 8 trillion, I attached it to this 80 here. And when it went to 18, I took it up here to the 180. So this is in direct correlation to the movement of the Nasdaq market. And I think when we hit 2020, you can see exactly why this is important. Here we are, and in a matter of a year and a half, we have increased our debt by $8 trillion. It had been running kind of on a course of here, a $500 billion a year, here, $1 trillion a year, continuing $1 trillion a year, and now we're up to $8 trillion in a year and a half. And what worries me is we were at pretty darn close to this on January. It's now the middle of September, and it doesn't look like Joe's going to get his $3 trillion package. Today's news is all about his trying to increase the tax rates on corporations and wealthy people. And the Republicans are saying, I don't think so. Don't think we're going to do that. So my question has turned around and said, if this doesn't go to 31 trillion in which would put it about right here. If it doesn't go to 31 trillion before the end of the year, what happens to the Nasdaq market? The funding has stopped because obviously the funding for this came from the U.S. Treasury. So I'm sitting here and saying, everybody has been telling me, and rightfully so, that the PE ratios of my big six are way out of line, and there's going to be a pullback. Okay, but the pullback didn't happen because the money flow was so strong, $8 trillion in the last year and a half. But if the money flow stops, what does the Nasdaq market do? That's my question. Then I want to show you something that I think that I need to investigate further. That's this chart here. This is the short position of the Nasdaq market. And I want to show you, we'll go into this in more depth in my next video. But I want to show you that there's a 3-to-1 correlation on this SQQQ, meaning that when the Nasdaq market drops 10%, the short position goes up 30%. Is this something we need to look into? Is this something we need to study further? I'll do a video on that tomorrow. But I also want you to look at the buying interest, and this goes back to, that's February of 2020. This is the buying interest in a 3x short position on the Nasdaq market. Let's talk about this some more. Okay, now you see what I see. I'm an opportunist. I believe that we have, if Joe doesn't get his $3 trillion package, the funding for any increase in price in the Nasdaq market is going to dry up. That being said, then, are everything just going to stay at the price they are? I don't think so. I think as the market sees that there is a lack of liquidity or increased liquidity. Now, I also recognize there's $4 trillion sitting on the sidelines. And that last graph I showed you, that last chart of the SQQQ, the 3x short of the Nasdaq, is where I think that money is finding a place. I don't think I'm the only one who has recognized that there may be an opportunity here. It may be a short-term opportunity. I think it's anywhere from a 5 to a 20% pullback. 20% is pretty drastic. But if, in fact, it does pull back, I want cash on the sidelines. As I said, I have sold some of my Google, Amazon, Microsoft, Apple, Tesla, Facebook, and Tesla. I have sold some of them. I have $200,000 in cash. I have from sales. I have another $150,000 sitting on the sideline in cash. That's just a cash reserve I keep. And I can access that at any point. So I'm going at the basis that I think there is going to be a pullback. What I need to decide now is, do I want to short this market? Am I that much of a believer? Now, what I didn't share with you on that short chart, and I will in my next video, is that stock, or that SQQQ, only sells for about $7.50 a share. So if I buy $20,000 of it and it loses half its value, so I've lost $10,000. I don't think that's going to happen. It just doesn't have room to do that. But we need to look into that further. What I want from you is your input. I know that this is something I've just come across. I know that you might have more knowledge about this than I do. So I'm asking you in the comments to give me your feedback. Tell me what you think, and I'll read it and I'll respond to it, and we'll see if we can't make a good financial decision. Now, if you want to get into this even deeper, every Friday I have a Zoom call with my tribe members, and then every Monday before the market opens, I have a Zoom call with my tribe members, and then we discuss it on our Discord account on a daily basis. If you want to get involved in that, go to bestofusinvestors.com and you'll find a link there. You just give your name and your email address, and you can get in on this discussion of, is this an opportunity? Is this the future? No, this is an opportunity. Is this a swing trade? Yeah, I guess it is. Is that something I'm comfortable in? Not really. So that's why I need your help. Some of you do this on a daily basis. So I'm asking for your help. I'm asking you to join our tribe. In fact, I wrote a book about it, The Power of the Tribe. You can find a link to this in the description below. And let's grow together. I think this is what makes investing fun, is discovery. And as you discover things that maybe you're a little ahead of the market, you have opportunity. So that's my take on this. Come join me and let's explore this together.